What's going on, guys? Before we dive into my weekly watch list video, I do want to give a brief update on the summer stock pick contest and tell you guys exactly how you can enter for this upcoming week. And first of all, thank you guys so much to everybody who entered this past week. We had some great performances. A lot of them were up 5, 10, 15, 17%, which is very impressive. And I hope we can keep that going and keep learning from each other. If you want to enter for this upcoming week, all you have to do is follow this format right here. So first, you have to comment down below a ticker symbol of your choice, the buy stop price, or you can also say market open, the sell stop price, and not the percentage, so not a 5% stop. You have to actually enter the sell stop price in there, and you have to enter the ID number if you participated last week. And this is just so we can keep track of everybody week to week, because I will be giving out prizes at the very end in week 10. So if you're curious about what this ID number is, go over to this Google Sheet, which I'll have linked below in the description. And if you entered last week, you should have been assigned an ID number that you should use from now on. And if you didn't participate last week, just leave it blank, as I say right here, and just say that this is your first week. Now, there are some additional rules. There are no earnings plays, and you cannot use a stock under $15. And make sure that you're taking this seriously, because this is all about learning and improving your trading. And two more important things. You have to double check your performance last week and make sure that I didn't make an error. And let me know on Twitter if I did, and I'll correct it, because I will be kind of keeping track of how everybody's doing week to week so we can assign those prizes. Another important thing, no edited posts will be allowed after the market opens tomorrow on Monday. So if you change your mind between now and then, delete your first comment and submit a new one. That just allows me to make sure that nobody's cheating. Now, I also want to talk about potential prizes. These are two ideas that I have: trading books or Amazon gift cards. Let me know if you have any more suggestions, and just let me know down below. But anyway, that is it for the rules. I'm excited to keep this going, and let's see who can be the most consistent performer week to week. So remember to enter, just follow this format, and now let's talk about my weekly watch list. All right, so with all that covered, let's go ahead and jump in to my weekly watch list. And overall, there are 18 stocks on my radar, and for each of them, we'll talk about their fundamentals in Marketsmith, which is sponsoring this video, and we'll also talk about the technical setups and entries that I would use to trade them. And starting off, we've got ALNY, and you can see that it's not yet profitable, but it does have quite substantial sales growth increases going back the past few quarters. You can see that it's not supposed to be profitable in 2020 or 2021. The EPS rating is a 17, the Group RS is an A+, the SMR rating is a D, accumulation distribution is an A-, the overall composite rating is an 80. Looking at the fund ownership, you can see it's increasing, and you've got 4 high-quality funds invested in this stock. The RS line is going straight up, and the overall rating is a very strong 92. Taking a look at the technical setup, you can see that it is very close to a green line breakout, and this was actually set all the way back in 2018, so you've got a nice long consolidation period. And looking at the price action last week, it was advancing on above average volume, showing nice demand, and finishing right near the top of the range on above average volume. Although keep in mind that this volume on Friday is pretty abnormal, and that's probably because of all the options expiring and rebalancing and all of that, so keep that in mind. But overall, I'm looking to use a green line breakout on above average volume as the entry setup. Next up on the list, we've got Chegg Inc., which has had quite good earnings and sales growth going back the past few quarters. Last quarter, earnings were up 47%, sales were up 35%, and after-tax margins were up as well, up 22%. In 2020, the estimates are up 23%, and 2021 up a further 22%, so there's a lot of growth expected. The EPS rating is a 99, the Group RS is an A, the SMR rating is an A, accumulation distribution is an A+, and the overall composite rating is a perfect 99. Looking at the fund ownership, you can see an increasing trend, and you've got 5 high-quality funds investing in this company. The RS line is going straight up, and the overall RS rating is a very strong 96. Taking a look at the setup that I would use, it advanced nicely from the green dot and actually bought it on this Monday, but now I'm looking for a break above the 67.98 level for a potential add on above average volume. So that is Chegg, and moving on, we've got a recent IPO, Chewy. And overall, you can see it's not yet profitable, but it does have quite good sales growth going back the past few quarters, up around 40%. And taking a look at the annual estimates, you can see it's not supposed to be profitable within the next 2 years. The EPS rating is a 15, the Group RS is an A+, the SMR rating is not available, the accumulation distribution is an A-, and the overall composite rating is a 74. Looking at the fund ownership, you can see an increasing trend, and you've got one high quality fund investing in this company. Looking at the RS line, you can see that it's kind of basing right now, just zigzagging back and forth, and the overall RS rating is a 93 as it sits just above this pivot from a stage 1 cup. And looking at the setup that I would use, it would be either on this green dot setup if it acts well early next week, or a break above this prior high at 52.45. Next on the list, we've got CrowdStrike or CRWD, and last quarter earnings were up 118%, sales were up 85%, and after-tax margins were up as well, up 2.5%. Looking at the annual estimates, you can see it's just supposed to be profitable in 2022. The EPS rating is a 69, the group RS is an A+, the SMR rating is a D, accumulation distribution is an A, and the overall composite rating is a 97. Looking at the fund ownership, you can see that it is increasing, although you had a dip in 2019, and you've got one high-quality fund investing in this company. The RS line is trending upwards, although it's not quite near all-time highs, and the overall RS rating is a 95. Looking at the technical setup, I would use a break above this green line on above average volume as an entry point, and I actually did try this on Friday, although it closed below it, so I sold my position, but I'll look to re-enter if it breaks above this on above average volume. So moving on, we've got FTNT, Fortinet, and overall you can see it's got very solid earnings and sales growth going back the past 3 quarters. Last quarter earnings were up 30%, sales up 22%, and after-tax margins up as well, up 18.1%. In 2020, the estimates are up 14%, and in 2021, up a further 16% as well. The EPS rating is a 99, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a strong 99. Looking at the fund ownership, you can see an increasing trend. You've got one high-quality fund investing in this company. Overall, the RS line is kind of basing right now, and the overall rating is a 92. Looking at the chart, you can see it's consolidating nicely after this big gap up on earnings, and overall, I'm looking to use a green dot entry or potentially a break above this prior resistance at 140 as my entry point. So that is FTNT, and next up, we've got another recent IPO, Fiverr. Looking at the earnings and sales, you can see it's not yet profitable, but it does have very solid sales growth, up about 43% going back the past 3 quarters. And you can see that it's not supposed to be profitable in 2020 or 2021. The EPS rating is a 47, the group RS is an A+, the SMR rating is a D, accumulation distribution is an A-, and the overall composite rating is a 96. Looking at the fund ownership, you can see an increasing trend. You've got one high-quality fund investing in this company. Looking at the RS line, you can see it's basing right now along with the price, and the overall rating is a very strong 99. Taking a look at the chart, you can see that I would either use a break above 69.34 or eventually 73.50 as my entry points, or you could also use a teal dot entry early next week. And overall, this has advanced substantially from the bottom. I think it's up about 200%, and it looks like it's consolidating nicely and could be setting up for another move higher. So that was Fiverr, and next up we've got GDDY, and looking at the earnings and sales, you can see a nice big jump last quarter. Earnings were up 243%, sales up 12%, and after-tax margins were up 5.4%. Looking at the annual estimates, you can see that they're up 38% for this year and up a further 37% in 2021, which is a pretty substantial jump. The EPS rating is a 99, the group RS is an A, SMR rating is a B, accumulation distribution is a B+, and the overall composite rating is a strong 98. Looking at the fund ownership, you can see an increasing trend, and you've got 4 high-quality funds investing in this company. The RS line is pretty much going sideways, and the overall RS rating is an 86. And looking at the setup that I would use, I'm looking for a break above the A247 level on above average volume. So that is GoDaddy, and next up we've got HZNP. And taking a look at the earnings and sales, you can see that last quarter it was up 42%, sales are up 27%, and after-tax margins were up 23.4%. In 2020, the estimates are down 5%, but it's supposed to pick right back up in 2021, up 48%, which is a decent jump. The EPS rating is a 73, the group RS is an A+, the SMR rating is an A, the accumulation distribution is an A, and the overall composite rating is a 98. Looking at the fund ownership trend, you can see it is increasing. You've got one high-quality fund investing in this company. Taking a look at the RS line, you can see it is basing along with the price, and the overall rating is a 95. Now taking a look at the chart, you can see that in this consolidation, I want to see a break above this 50.9 level on above average volume, and I really like this close on Friday when there was overall weakness. You can see it's closing right near the top of the range on above average volume. That's great to see. Next up on the list, we've got Infi Corp or IFI, and it's got excellent earnings and sales going back the past few quarters. Last quarter up 88% in terms of earnings, sales up 70%, and after-tax margins up 22.6%. In 2020, the estimates are up 66%, and in 2021, up a further 31%, and this is a breakout year in 2020. The EPS rating is an A2, the Group RS is an A, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 98. Taking a look at the fund ownership, you can see it's increasing nicely, and you've got 3 high-quality funds investing in this company. Taking a look at the RS line, you can see it is decreasing, and the overall rating is a 95. Looking at the entry setup that I would use, it would be a break of this downward trend line right here, or potentially a green dot or other bounce entry, especially off the 50-day moving average. So that is my plan with IFI. And next up on the list, we've got a recent IPO, KC. And overall, you can see it's not yet profitable, but it does have quite substantial sales growth, up about 60, 90%, and last quarter up 56%, which is pretty decent for an IPO, but it's not supposed to be profitable in the next couple of years. The EPS rating is a 24, the Group RS is an A+, the SMR rating is a D, accumulation distribution is not available, and the overall composite rating is a 70. Looking at the fund ownership, you can see that it's actually too new for that data, and it's approaching a pivot, has an RS rating of 69, and the RS line is going right where you want it, straight up. And taking a look at the chart in TC2000, you can see it formed a higher low right here, and it's right near that pivot, so I want to see a breakthrough this 26.89 level on above average volume, and that would be the entry setup for this stock. Next up, we've got MKTX, and overall you can see nice and solid earnings and sales growth going back the past 3 quarters. Last quarter earnings were up 41%, sales up 36%, and after-tax margins were up 44.3%. And looking at 2020, you can see it's supposed to be a breakout year, up 35%, and in 2021, it's supposed to increase a further 5%. The EPS rating is a 95, the Group RS is an A-, the SMR rating is an A, the accumulation distribution is an A-, and the overall composite rating is a strong 98. Looking at the fund ownership trend, you can see it's increasing nicely. You've got 5 high-quality funds investing in this company. And taking a look at the RS rating, you can see it's a 92, and the RS line is basing along with the price. So now looking at the chart, you can see it actually had a teal dot on this past Friday, and you had a nice shakeout in there as well, falling back close to these moving averages. So this could be a setup day for a breakout into new all-time highs through 526.98. So that's MKTX. And next up, we've got NBIX. And taking a look at the earnings and sales, you can see nice substantial increases. Last quarter up 183% in terms of earnings, sales up 71%, and after-tax margins were up 33.4%. In 2020, the estimates are down 2%, but in 2021, it's supposed to have a breakout year of 43%. The EPS rating is a 77, the Group RS is an A+, the SMR rating is an A, the accumulation distribution is a B, and the overall composite rating is a very strong 98. Looking at the fund ownership, you can see it's increasing nicely. You've got 3 high-quality funds investing in this company. And taking a look at the RS line, you can see it's breaking out with the price, and you've got an overall RS rating of 88. And you can also see that this Friday was the largest volume since the base, and it was a stage 1, so it's just breaking out of a new base. And talking about the setup that I would use, this did have a green line breakout on this past Friday, so you could enter on a continuation of this move upwards. So that is NBIX, and next up we've got Okta. And overall, you can see it's not yet profitable, but it does have very solid sales growth, up about 45% going back the past few quarters. And looking at the annual estimates, you can see it's not yet supposed to be profitable in 2021 or 2022. The EPS rating is a 57, the Group RS is an A+, the SMR rating is a D, accumulation distribution is a B-, and the overall composite rating is a 92. Looking at the fund ownership, you can see that it's increasing nicely. You've got 4 high-quality funds investing in this company. Taking a look at the RS line, you can see it's increasing along with the price last week, and you've got an overall RS rating of 94. And taking a look at the setup that I would use, it would be a breakout above this 205.71 level on above average volume. Moving on, we've got ONEM, which was also on my list last week and advanced nicely on Friday. And overall, you can see it's not yet profitable, but you do have some signs of excellent sales growth in here. Although last quarter it was only up 25%, and it's not supposed to be profitable in 2020 or 2021. The EPS rating is a 6, the group RS is a B+, the SMR rating is not available, accumulation distribution is a B+, and the overall composite rating is a 54. Looking at the fund ownership, you can see that there's 180 funds in this stock. You've got 2 high-quality funds in there as well. And looking at the RS line, you can see it's moving up along with the price. The overall RS rating is a strong 94. And looking at the setup that I would use, it would be a break above this resistance level at 36 and eventually into new all-time highs above 42. Moving on, we've got Square or SQ, and you can see it wasn't profitable last quarter, but you do have a history of very strong earnings and sales growth. And the estimates for 2020 are down 66%, but it's supposed to pick right back up in 2021, up 252%. The EPS rating is an A2, the group RS is an A+, the SMR rating is a B, accumulation distribution is an A-, and the overall composite rating is a 97. Looking at the fund ownership, you can see it's increasing nicely. You've got 5 high-quality funds investing in this stock. And looking at the RS line, you can see it's trending upwards, and the overall RS rating is a very strong 96. And looking at the setup that I would use, it's also a potential green line breakout, although it did fail on this past Friday, but maybe expect some consolidation right here before a definitive breakout, because we're also near a very key level around 100. So keep that in mind. You want to see volume coming in as it breaks out into new all-time highs. Moving on, we've got Team, which has had very strong earnings and sales growth going back the past 3 quarters. Last quarter up 19%, sales were up 33%, and after-tax margins were up 15%. In 2020, the estimates are up 28%, and 2021 up a further 23%, so there's a lot of growth expected. The EPS rating is a 98, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 99. And looking at the fund ownership, you can see it's increasing nicely. You've got 6 high-quality funds investing in this company. However, the RS line is decreasing at this moment, and I want to see this start to move up as this forms another base. So looking at the chart, you can see that 180.53 has been a point of resistance, so I want to see it break through that on above average volume and eventually break out into new all-time highs above the 190 level and eventually above the 191.72 level. So that is my plan with Team. And moving on, we've got TW, another recent IPO. And looking at the earnings and sales, you can see nice strong increases, up 61% last quarter. Sales were up 26%, and after-tax margins were up as well, 36.4%. In 2020, you can see that the annual EPS is supposed to be up 27%, and 2021 up a further 7%. The EPS rating is a 97, the group RS is an A-, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 98. Looking at the funds, you can see it is kind of just flat, but you do have 5 high-quality funds investing in this company. Looking at the RS line, you can see it's kind of going flat at this moment, and you've got an overall rating of 91. And looking at the technical setups that I would use, you can see it just broke this downward trend line right here, and actually had a green dot recently on this past Wednesday. So look for a move up on above average volume starting early next week. So that's my plan for TW. And lastly, we've got Vertex. And overall, you can see very strong earnings and sales growth going back the past 3 quarters, up 125% in terms of earnings last quarter, sales up 76%, and after-tax margins up 44.5%. In 2020, the estimates are up 67%, which is a breakout year, and in 2021, up a further 23% as well. The EPS rating is a 99, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a strong 99. Looking at the fund ownership, you can see an increasing trend. You've got 4 high-quality funds investing in this company. And looking at the RS line, you can see it's jumping up strongly last week, and you can see that the overall rating is a very strong 90. And taking a look at the entry setup that I would use, it would be a breakout above this point of resistance right here at 295.55. And I actually have one more addition to the watch list, TDOC, which is similar to ONM. And overall, you can see a ton of funds in this stock, and you can see that it's not yet profitable, but it does have very solid sales growth, up 41% last quarter, and you can see that it's not supposed to be profitable in 2020 or 2021. The EPS rating is a 39, the group RS is an A+, the SMR rating is a D, accumulation distribution is a C, and the overall composite rating is an 88. Looking at the fund ownership, you can see that's doubled over the past 2 years, and as I said, a lot of funds are in this stock. And taking a look at the RS line, you can see it's jumping up nicely as this forms a base, and the overall rating is a very strong 97. Looking at the chart and the technical setup that I'd use for this stock, it just broke out below this downward trend line last week, and I'm looking for a breakout into new all-time highs above this 203.85 level. All right, so that is my focus list for the upcoming trading week. And overall, my top 3 picks are probably Fiverr, InfiCorp, and also Vertex. Remember to leave down below your pick for the stock picking contest, and also remember to leave a like on the video and subscribe if you're new to the channel. But that's it from me. Thank you guys so much for watching. Best of luck next week, and I'll see you guys in future videos.